Now, before we move into the strategy section, it is very important for you to understand the concept of risk management first, which most of the traders, especially the new ones, they totally avoid this concept. New traders will look for strategies because they believe that strategies are the only concept which will make them money from the market, which is totally wrong. One thing you need to understand is that no strategy will give you 100% accuracy. Today or tomorrow, your strategy is going to give you a loss, and at that time, your risk management will play a very important role to quickly exit your position. If you really want to make money from this market and if you want to be a professional trader, then your primary focus should be your risk management and strategies should be your secondary focus. Remember, strategies will make you a disciplined trader and risk management will help you to stay in this market for a long time. And if you are staying in this market for a long time, there is a very high probability that you will end up making good money from trading. So let us understand more deeply regarding risk management, which will make you a profitable trader. As I told you, risk management should be your primary focus and trading strategies should be your secondary focus. Risk management should be your primary focus. Risk management is far more important than setups. Setups mean trading strategies. Setups means trading strategies. One thing to realize is that none of your trading strategy is going to be 100% accurate. None of your trading strategy is going to be 100% accurate. No matter how better your trading strategy is, today or tomorrow it's going to give you a loss. Okay, at that time, as I told you, risk management is going to be very much crucial. Stop loss is very important. Most of the traders, what they will do, if their stop loss is about to get hit, they will keep on changing the position. And regarding stop loss, I'm going to give you more details in the upcoming slides. But right now, just remember that stop loss is very, very, very important. And stop loss, how much should be your stop loss? Your stop loss should be 2 to 5% of your capital. So suppose if your capital is 10,000 rupees, then your stop loss will be between 200 to 500 rupees. It should be between 200 to 500 rupees. Because if your stop loss is 2 to 5% of your capital, you will be safe. Even if your stop loss gets hit, you will still have capital to take next trade. Most of the traders, what they do, especially new traders, they won't keep the stop loss and the result is going to be more and more loss. Okay. So stop loss is very important. It is very crucial for you to keep your stop loss if you want to trade professionally. And your stop loss should be 2 to 5% of your capital. It should be 2 to 5% of your capital. Okay, so let us move into the next slide now. There is no place for emotions or emotional trader. See, suppose if you are new in this market, there will be times when you are taking a position and if the price is behaving against your opinion and if the price is hitting your stop loss, if your stop loss gets hit, you will get angry, right? You will get angry and in order to cover up your losses, you will take more quantity and you will start doing over trading. Okay, you will start doing over trading. Why? Because you are not able to control your emotions and the result is market will punish you for that. Market will punish you for that with more and more loss. With more and more loss. Why? Because you were not able to control your emotions and you started doing over trading. See, one thing to remember is that once your stop loss gets hit, accept your loss and move on and wait for your trading setup or trading strategy to give another trade. Most of the traders, especially new traders, once their stop loss gets hit, their ego will get hurt. Their ego will get hurt. They are not able to see their loss, and in order to convert their loss into profit, what they will do? They will take new trades with huge quantities. They will take new trades with huge quantities, and that is the clear indication of over trading. That is the clear indication of over trading. That is a clear indication that they are not able to control their emotions. Happens to new traders lots of time. Okay, so I suggest you, if you are a new trader, work on controlling your emotion, because I promise you that if you are able to control your emotions, once your stop loss gets hit, okay, once your stop loss gets hit and if you're able to control your emotions, I promise you at the end of the month, you will always end up in profit. You will always end up in profit. Why? Because you're controlling your emotions, and the result is that you're not doing over trading. See, according to the data, 85 to 90% of the traders right now are in loss. 85 to 90% of traders are in loss, and the main reason for that is over trading. And the result of over trading is because they are not able to control their emotions. So if you are a new trader who are watching this video, I recommend you that you start practicing to control your emotions. Okay, don't be an emotional trader, be a professional trader. What professional traders they will do, once their stop loss gets hit, they accept their loss and they move on. Okay, they accept their loss and they move on, and then they will wait for another setup to give them a trading signal. This is what you have to do. If you want to be a professional trader, okay, wait for your trading strategies to give you a buying and selling signal. Once your trading strategy or trading setup is giving you a buying and selling signal, then and only then you enter your trade. Don't be an emotional trader, because lots of time what will happen, once your stop loss gets hit, or suppose if your trading strategy is working for a long time but suddenly you got a loss, you will not control your emotion at that time, and in order to cover up your loss, you will start taking huge quantities. To turn your loss into profit, and the result is more and more loss. And the market is going to punish you for that. Okay, market is going to punish you if you are doing over trading and if you are not controlling your emotions. So my humble request to you, to all the traders who are watching this video, is that always try to control your emotions. Don't be an emotional trader, be a professional trader, and please do not overtrade. Okay, so let us move into the next slide now. Now we can compare risk management with a person who wants to lose weight. If a person who wants to lose weight, what he will do? He will focus 80 to 90% on his exercise, and then he will pay very little attention on his food which is eating. And expert says that 70% is your diet and 30% is your workout. And the sooner you realize that diet has more importance, better will be your result. You will see your result very quickly. Okay, same way, in order to gain your trading account, 80% is your risk management and 20% is your strategy. The sooner you realize, better it is for your trading account. You will gain your trading account very quickly if you pay more attention to your risk management. Okay, because one thing to realize is that no strategy is going to give you 100% accuracy. Today or tomorrow, whatever strategy you are going to use, it is going to give you a loss, and at that time, your risk management is the only concept which will help you to stay in this market for a long time. And as I told you, if you are staying in this market for a long time, there is a high chance that you will make money from this market. Okay, so I suggest you that you pay more attention to your risk management, and you will definitely see your trading account grow in front of your eyes. So let us see the next slide now. Usually traders wait longer in losing side and exit immediately when they are in profits, and this happens especially to those traders who are very new to this market. What they are going to do, suppose if the price is acting against their opinion and if the price is about to hit their stop loss, so new traders, what they are going to do, they will keep on changing their stop loss position to new position. And again, if the price is about to hit their new position, okay, the stop loss of the new position, what they are going to do, again they will keep on changing their stop loss position, and the result is more and more loss. The market is giving you a chance to exit your position once your stop loss gets hit, so you have to exit at that time before it is too late. Okay, before it is too late, exit your position once your stop loss gets hit. You need to accept your mistake. And the same traders, same new traders, if they are in profit even by plus 10 points or 20 points, if they are in profit even by 10 or 20 points, what they're going to do, their hands is going to shake and they will have this thought of exiting their position immediately. They are in profit by only 10 and 20 points and they want to exit their position immediately. Why this type of thinking happens? Because their risk management is not under control. Their risk management is not under control. An advanced trader, what they are going to do, they will stay in a profit side for a long time and then they will exit immediately on stop loss. Okay, this happens with practice. If you are practicing daily in front of market, if you are sitting in front of market, then definitely you will control your emotions and then you will stay in a profit side for a long time and exit immediately on stop loss. See, there is one concept of risk to reward. There is one concept of risk to reward. It is always advisable that you keep your risk to reward ratio of 1:2 or 1:3. 1:2 or 1:3 should be your risk to reward ratio. Okay, I personally follow 1:3 as my risk to reward ratio. A risk means, suppose if I am losing 1 point, my reward will be 3 points, or if I am losing 1 point, my reward will be 2 points. Okay, that is the risk to reward ratio. So if you are following your risk to reward ratio of 1:2 or 1:3, even if you are not following your strategy, there is still a high probability that you are going to make money from this market. Even if you are not following your strategy, then also there is a chance that you will earn money from this market if you are following your risk to reward ratio of 1:2 or 1:3. And the thing is that if you are following your risk to reward ratio, there is a high probability that you are going to stay on a profit side for a longer time. If you are following your risk to reward ratio, suppose if your risk to reward ratio is 1:2 or 1:3, you will not exit your position until you are earning your 2 or 3 points, right? So definitely you are going to stay on a profit side for a long time and you will exit immediately on your stop loss. So it is always advisable that you respect your stop loss. Once your stop loss gets hit, don't increase your position of your stop loss. Once your stop loss gets hit, exit immediately, because if you are not exiting, there is a high chance that you will suffer more and more loss. Okay, so it is always advisable for the traders that you should follow your risk to reward ratio and you should stay on a profit side for a long time and you should exit immediately once your stop loss gets hit. So focus more on your risk management and you will always be positive at the end of the month. As I told you, if you are focusing on your risk management, even if you are not following a particular strategy, there is still high probability that you are going to make money from this market at the end of the month, which is very important. In a single day, even a gambler is going to make money. Even a gambler is going to be profitable if it is his day. But at the end of the month, it requires your skill. Okay, this trading requires your skill to be profitable at the end of the month. And if you are really paying more focus on your risk management, you are going to see your trading capital grow in front of your eyes. So pay more attention to your risk management if you want to stay in this market for a long time. And as I told you, if you are staying in this market for a long time, you are going to earn money from this market, because strategy is not going to be 100% accurate. Your strategy is not going to be 100% accurate, but if you are focusing on your risk management 100%, you will see your trading capital grow. Okay, so I hope you understood the concept of risk management. I hope you understood that the emotions of a trader plays a very important role in order to be a profitable trader. So in the next lecture, we will see regarding the psychology of a trader. What psychology he must possess while trading. Okay, we will see that in our next lecture. So see you all in the next lecture. Take care, everyone.